Good morning this Wednesday, the 13th of November. I'm Grady Wolf, market analyst with Bell Direct. The Wall Street post-election rally took a breather on Tuesday from the record highs set across the major averages in recent sessions. The Dow Jones fell 0.86% on Tuesday, the S&P 500 lost 0.3%, and the tech-heavy Nasdaq ended the day down 0.09%. Treasury yields also climbed on Tuesday, with the 10-year adding around 10 basis points, which also weighs on investor appetite for equities. In Europe overnight, markets closed lower in the region as investors digested what the Trump White House could mean for the eurozone economy. The STOXX 600 fell 2.01% as mining stocks led the losses, while Germany's DAX fell 2.13%, the French CAC lost 2.7%, and in the UK the FTSE 100 ended the day down 1.22%. Across the Asia markets on Tuesday, it was a sea of red to end the trading day as investors assessed key economic data out in the region, including retail sales and business confidence data. Japan's Nikkei fell 0.4% on Tuesday, China's CSI index lost 1.1%, Hong Kong's Seng tumbled 2.84%, and South Korea's Kospi index ended the day down 1.94%. The local market started the week lower as miners weighed on the local index amid weakened commodity prices across the board on China's lackluster stimulus and demand outlook. The ASX 200 closed 0.13% lower on Tuesday as a sharp sell-off in materials and energy stocks offset a near 1.4% rally among our tech stocks. Uranium miner Paladin Energy tanked over 20% on Tuesday after the company cut its production guidance for FY25 at its Langer Heinrich mine in Namibia amid ongoing challenges and operational variability to date that is impacting the ramp-up of production at the mine. The new FY25 production guidance for the Langer Heinrich mine is expected between 3 to 6 million pounds of uranium, below the previously issued guidance of 4 to 4.5 million pounds, and management withdrew all other guidance for FY25, which spooked investors. A boom in New Zealand-based claims for insurer NIB is expected to hit profits for the first half, as NIB said extraordinary growth in NZ claims would result in an operating loss in the first half of around $10 million. Shares in NIB fell 0.7% on Tuesday. Westpac consumer confidence for November and NAB business confidence data for October were both released yesterday, with both strongly beating economists' forecasts. Consumer confidence decreased slightly to 5.3% from 6.2% in October, but this was well above the forecast of a decline to minus 0.8%, while business confidence rose to 5 points in October from minus 2 points in September and beat market expectations of a rise to 2 points. Easing inflation was the key driver of the boost in confidence readings. On the commodities front this morning, oil is trading 0.39% higher at $68.31 a barrel. Gold is down 1.11% at $2,595 an ounce, and iron ore is down 0.7% at $103.1 a tonne. The Aussie dollar has weakened against the greenback to buy 65.82 US cents, 100.92 Japanese yen, 51.1 British pence, and 1 New Zealand dollar and 10 cents. Ahead of the midweek trading session here in Australia, the SPI futures are anticipating the ASX to open the day down 0.98% on the back of the global market sell-off overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has initiated coverage of Woolworths with a hold rating and a 12-month price target of $31.75. The analyst says the recent share price correction follows the commencement of legal action by the ACCC and softer first half 25 guidance. And Bell Potter has also initiated coverage of Perenti with a buy rating and a 12-month price target of $1.47, with the analyst noting shares should appeal to investors as they trade 6 times under FY25 EPS, offer high cash generation, a discount NTA of $1.26 per share, and offer a 6% yield with an approximate 3% buyback planned. This is also supported by higher mining and drilling demand for gold in Australia and Africa. And that's all for this Wednesday. Have a wonderful day and happy investing.